Hello, here's your business headlines on Afternoon Live. European and UK business leaders have told Prime Minister Theresa May of their Brexit concerns. At a meeting in Downing Street, representatives from groups including the CBI and Business Europe pressed for a transitional deal that preserves the status quo after Brexit. Shareholders in the Nisa convenience store group have approved the chain's £137 million takeover by the Co-op Group. It was a narrow win. Just over 75% of shareholders voted in favour of the minimum requirement. Nisa has more than 3,000 stores and operates a wholesale business. And German energy giant Innogy has reduced the value of its UK energy business, Npower, by £427 million, partly in response to tightening regulations and its merger with a former competitor, SSE. It said competition in the UK retail business remained very tough.
Now, what's going on? Because the pound is dropping.
Yes, that's right. So that's kind of in response of the future in question of the Prime Minister. We had that Times report out at the weekend saying that 40 MPs had signed this no confidence letter. And so sterling dropped quite considerably against the dollar and also the euro. So it's not a great time to change your money if you're going on holiday. No. Almost 1% fall, so that's quite considerable. OK, and we've been reporting today about this meeting in Downing Street. There's a lot of angst in business about Brexit. Yeah, both in Britain and Europe. They want the status quo to remain after Brexit. They're a bit concerned about the progress of talks. The CBI, the Confederation of Business Industry, they said that 10% of companies had already activated their contingency plans, and they're sort of concerned about the clarity of what it will mean for business in terms of the deal and the talks. OK, and you're also looking at a possible takeover involving the Co-op. That's right. So Nisa had a vote with its shareholders. 75% of shareholders voted for a takeover by Co-op, so 75% was the minimum, so it was sort of described as a narrow win. And so this will be pretty good for them because it means that they can fit under the Co-op Group, which is rather large. Well, joining us now to tell us a bit more about all those stories is Mike Bell, Global Market Strategist at JPMorgan Asset Management. Thanks for joining us, Mike. Let's start with that Nisa Co-op deal. I mean, it just shows how changeable the shopping market is these days.
I think it's an extremely competitive market, and I think what's going on here is that they're looking for size and scale so that they've got more buying power, and that makes them more able to compete in a very competitive market.
And do you think this is going to impact Co-op in the way that, say, we've seen lots of high street supermarkets really having to change the way they sell these days because of the likes of Aldi and Lidl? Do you think Co-op's going to have to change in the same way?
I think everyone's under pressure. You've got the discounters which are putting pressure across the whole market. You've seen moves with, for example, Amazon's purchase of Whole Foods. And I think that the whole industry at the moment is facing pressures from weaker consumer confidence as consumers feel the bite from higher inflation eating into real wages. So I think it's a difficult outlook for the sector, and that this consolidation should help.
OK, let's move on to businesses and Brexit. They expressed their concern today at the progress in terms of talks. And we saw a fall in the pound earlier today as well. Is that correlated, or is that more to do with the future of the Prime Minister?
I think that what business and the markets in particular are focused on is, are we going to get a transitional deal or not? Because the risks of not getting a transitional deal are really very significant to the pound. So you'd expect the pound to fall quite significantly if we don't get a transitional deal. And anything, be it concerns around the political uncertainty at the moment or anything else that suggests that perhaps you're less likely to get that transitional deal, you would expect to weigh on the pound. OK, Mike, we'll have to leave there. Thank you very much for joining us. Mike Bell from JPMorgan Asset Management.
And let's have a quick look at the markets.
So, interestingly, the pound is down, but the FTSE is down as well. And that's because retailers are having a bit of a tough time. An unusually warm October's meant sort of sales have been not as great as they should be. And
it's
so
Christmas in a month.
I know.
They should be perky, shouldn't they? But perky's a good word, yes, perky.
We're all saving our money for next month, perhaps. But next, M&S, Kingfisher, Morrison took a bit of a battering. Also, airline stocks aren't doing too well. IAG and EasyJet. So that's probably putting pressure on the FTSE, but it's not down by too much. It's sort of kind of flat, really. But it is a bit odd to see that, given that the sterling is down, and we usually see that correlate to a positive FTSE 100, but not today.
Yeah, mind you, 7415, pretty impressive figure anyway, isn't it?
It's pretty, if you compare it to about a year and a half ago.
Indeed.
Yes, very impressive, yeah.
Vishala, thank you very much.